Hello, Oracles. Today we're going to go over investing for beginners. How to start. So many people out there wondering, hey, I want to get wealthy or I just want to build up some sort of retirement portfolio so that I don't have to work until I die, but I don't know anything about investing. I don't know where to go. I don't know what to put my money into. It can be very overwhelming. Today, I want to give you 3 basic steps to get yourself started. Now, none of this is financial advice. I can't tell you guys where to put your money, but I can give you suggestions and just some ideas as to where to go to just get started on this. And I'll give you just a general idea, and you can pick one of the ones that I give you guys as suggestions as to where to start with investing. And then from there, you can follow my videos. A lot of other people on YouTube also have some great videos out there. And then just do your own due diligence and learn more about it if that's something that you want to do. But today I'm going to go over very strict basics as far as just how you can start investing and where you even have to go to start that, what you can start putting your money into once you find a broker to put your money into, and then what strategy you can use as far as what you should be doing with your money and how much you should be putting in and investing. So we will go over those 3 things. Before we get started, if you guys can just make sure you hit that like button down below and subscribe to the channel, it really helps me out a lot and I appreciate all of that support. All right, so the first thing to get into is, where do you put your money? How do you even invest? Where do you go to put your money into the stock market? That answer is a broker. And there's a lot of different options all over the world. I'm going to go over the ones today for the US. So here in the US, you've got a lot of different options. I personally use Schwab. I was in TD Ameritrade, which then got bought out by Schwab. So it's in that. And then SoFi. I love SoFi. For somebody who's just getting started and you don't have a lot of money to invest, SoFi can be a very good option because you can trade fractionally in there. You can buy fractional shares, and this is just pieces of it. So let's say, for instance, VOO, which is one of the ETFs we're going to talk about today, is over $500. You may not have $500 to put in. Maybe you've got $10 to put in. Through SoFi and other platforms that trade fractionally, you can just buy $10 of it. It's fantastic. So looking for something, if you have less money and don't have a large sum to invest, could be something where you're looking fractionally. And for fractional trading, a couple of the top ones out there are SoFi and Robinhood. So you guys can check those out. And there are a lot of other options. And anybody out there who's using another platform, please feel free to put them in the comments down below. So anybody who is new and looking at investing, checking this out, they can check out the comments and see what's down there. Especially if you're in another country, please, if you're going to put it in the comments, list what country you're from and what brokers are available in that country. You don't necessarily have to mention the one that you are using, but just what brokers in that country are available. So anybody from around the world in that country that wants to start investing can see that and go from there. So here in the US, again, fractional trading, you've got Robinhood and you've got SoFi. And around the world, not everybody can do fractional trading. So it's important to learn what you can do in your own country. So other than those, I do have Schwab. And again, it's just because I ended up having from TD over to that. That's where the majority of my money is. I also have my IRA in there. And there's a lot of other great ones as well. You can go through Chase, you can go through E-Trade, you can go through M1 Finance, tons and tons of different options for brokers out there. You can Google it. And again, anybody who likes a platform that they use, please put it in the comments down below to give everybody who's watching this a larger option. And not to overwhelm you guys with what the options are that are out there, just pick one and go with it. And again, if you're looking at something that you want to be buying fractionally, maybe go with a SoFi. There's better tools, I think, on Schwab right now to utilize. But if you're new to investing, you're probably not going to be using those tools. I don't use a lot of them myself. SoFi doesn't have as many tools, but again, as a newer investor, it's much more simple in my view to go through SoFi because you can set things up and you can have buys just automatically taken out through SoFi, which you cannot do through Schwab. All right, so step number 2, now that you have picked a broker that you're going to be buying your stocks in, what do you buy? I mean, that of course is the biggest question is cool, I have a broker, but what am I buying? Well, how do you know what even to buy? Because it's such an overwhelming amount of companies that are out there. You're buying at a good price, you're buying at a bad price. Is the stock price going to go down? Eliminate all of that from your mind. Who cares which way the stock price is going to go? Historically, the best way to make money in the long term in the stock market is dollar cost averaging, or DCA. Some of the best performing portfolios that are out there have been from people who have died because they're not paying attention to it. Keeping your eye on the stock market every single day, especially as a beginner, probably not the wisest thing. You're going to get your emotions involved, and you do not want to have your emotions involved in the stock market. It is detrimental. There are people out there with a ton of money that are going to manipulate your emotions one way or the other. This is going to be a set it and forget it plan, dollar cost averaging. So I'll give you some options of ETFs. Those are exchange traded funds that you can get yourself into to just get started out there. And you can just slowly put money in. Ignore the price of the stock market, ignore the price of everything else. Find a dollar amount that's going to work for you and your budget and just put it in on a regular basis. Similar to your 401k, you have money that automatically comes out, automatically goes into your 401k, regardless of where the stock market's at. Now, if you look back at 2007 and 2008, when we had the great financial crisis and the stock market crashed, you putting money into the 401k at that time was buying at much lower prices. That was going to get you a lot more shares of whatever stocks and ETFs you were buying in that 401k, which meant that you made a lot more money coming out of it. Same principle holds true. You're just going to be the one who's going to be doing that yourself. But again, you weren't probably paying attention to what your 401k was doing back then, unless you were in retirement. So you need to have that same mentality now as you're going to be manually putting this money in. And again, what I love about SoFi is you're not even manually doing it. You can set it up so it's a set it and forget it strategy. So you don't even have to see it. It's just going in there automatically. You're not touching any of it, and it just does its thing. And if you guys are interested in SoFi, there is a link that is going to be down in the description below. You guys can go set it up there. You get a bonus from it. I get a bonus from it. It's a win-win situation for everyone if you guys want to go and check that out. So some options for some ETFs to get into, again, that's an exchange traded fund, are baskets of stocks. And one of the best places to get started is what basically the market looks at as the baseline, and what everything is compared to is the S&P 500. Now, the S&P 500 historically gives an 8 to 10% return every single year. Now, it's obviously going to be fluctuating. Some years are going to be a lot more than that. Very rarely you're going to have a negative year, and some years are going to be a little bit lower. But on average, it is going to return 8 to 10%. That is what the baseline is and what everything is compared to in the market. So what places can you put your money when it comes to the S&P 500? And so some of the options that you can go into are going to be the SPY. This is the SPDR S&P 500 fund, and this just tracks the S&P 500 as it is. The ticker symbol for this is SPY. This is one of the more expensive ones that are out there. This one is at $597.88 as of close last week. And an expense ratio is something to pay attention to also. This is a little fee that they charge you at the end of the year. This is negligible. 0.0945% is a very small amount, but it is something to pay attention to, especially if you're going to be branching out and looking at other ETFs. The next option, which is the option that I have, is VOO. This is the Vanguard S&P 500 ETF. Same exact thing. It tracks the entire S&P 500. The price on this one is a little bit lower at just about $550, and the expense ratio on this one is significantly lower at 0.03%. Now, expense ratio 0.03%, this means that you're going to be paying $30 for every $10,000 that you have invested in this ETF at the end of the year. Again, very negligible, extremely low. And now if you're in another country or you have a platform that does not allow fractional trading and you still want to invest in the S&P 500, you can go with the SPDR portfolio S&P 500 ETF, the SPLG. This again is going to be tracking the S&P 500, but it's a much lower price and much lower expense ratio. This one here trades at $70.33 as of last Friday, and the expense ratio is 0.02%. So this is one of the top picks for some people out there. I've just been investing in VOO for a while now, so it doesn't make any sense for me to change over, and I can buy fractionally. But again, this one here appeals to a lot of newer investors as well because it's a much lower price and a lower expense ratio. And then the last option you can get is the entire total stock market. If you want to get into all of the stock market and not just all of the top stocks that are in the US, and you want to invest in everything, you can get into the VTI. This is the Vanguard Total Stock Market ETF. The price on this one is just under $300 with the same expense ratio as the VOO at 0.03%. And so what you would do in order to buy those is you would go onto your broker, and there's usually a little search magnifying glass or something that is in there for you to be able to purchase and search out whichever stocks or ETFs you want to purchase. You would click on that and you type in the ticker symbol, VOO, SPY, VTI, SPLG, whichever one appeals to you the most. You just type that in there and it will bring it up. And every platform is different, so I don't really want to show you an example on here because it may confuse you based upon a different platform. But whichever brokerage you're going to be using, you would just scroll down and it's pretty easy. It's going to say buy, and you just hit buy on it, and then it'll just ask you how many shares you want to purchase, and that's it. And you probably have to fund it. So in setting up your brokerage, it's probably going to have you link your bank to it and everything. So you would link your bank to your brokerage, have that all set up, and then you can put the funds in there. Sometimes you can do direct deposits. For me with SoFi, I have my direct deposit going into my SoFi savings. I have a vault in my SoFi savings. That's going to be for another video. But in there, I have all of my money that goes into that. I get 4.2% back on all of the money that I have in that savings vault. And then from there, I just shift my money right into the brokerage section on SoFi. So it's nice because all of my money is in one place. And I can just have it automatically put in there. If I wanted to, I can even get a 1% bonus on all of the money I transfer in that is automated in there. So if I wanted to do $10 a week, I can get $10 plus 1% for every $10 that I've been putting in there. And I could just have that done every single week put in there, and then I can trade off of that. So a lot of great benefits from SoFi, which is why I love the platform so much, especially for newer investors that are out there. Because if you don't know where you want to put your money and you're very conservative, you can leave it in savings and you can get 4.2% interest back on your money that you have in savings. Or you can put it over into the brokerage and you can go back and forth very easily over there. Again, that link is going to be down in the description. And then lastly is, well, how much money do you put in? And how do you do that? So that's going to be a question only you can answer. You've got to take a look at your entire budget and say, all right, well, how much of my budget can I afford to invest in the stock market? And I recommend looking at it on however often you get paid, whether it's weekly, bi-weekly, monthly, however it is. Say, all right, at the end of that time period, I can say, hey, I've got $5, $10, whatever it is that you've got that you can go and put into the stock market. Have that automatically taken out and put into your brokerage. Schwab does it, and I'm sure all the other platforms as well. I used to have Schwab taking out $10 every single week on my payday, and it just went right into the account. Then I had the cash sitting there, and I can do what I wanted with it. You can do that through SoFi as well. Again, any one of the platforms out there basically have a way to do an automatic deposit coming out of your bank account. So obviously just make sure your bank account has the money that's in there, but it's one of those out of sight, out of mind things. And when you start doing that, it's like, all right, now you don't even have that money to spend because it never actually really made it to your bank account. And that was very beneficial for me because now it didn't give me those temptations to go out there and spend it on anything else. It was going into the stock market. It was almost like me automatically having money taken out to go into my bills or something like that. And I considered investing to be like a bill. And it's an untouchable account that I can't go into because that money is there. I can't touch it. I can't take it out. And that's really it. So that's there, set it and forget it, and it's gone. And so whichever brokerage you want to set up, just set it up with a direct deposit coming out every single week, bi-week, monthly, whatever it is that works best for you, so that money is automatically going in there. Some you can do an automatic investment on as well. So for instance, on SoFi, if I just decided on VOO, for instance, I had VOO in my portfolio. I had $10 every single week go into my portfolio, automatically get invested into VOO. Again, very much like your 401k. So I had this set up for a while for a lot of my different stocks that are out there, and it worked out very, very well for me. And again, for a newer investor, just a set it and forget it strategy. And if you want to learn more later on, then you can dive in there. But at least you're getting your foot in the door and starting with the investing journey. And again, once you start forward, then you can take the time to learn some more things. Or if you don't have time, at least you've set it. Maybe if you have more money that comes in at a later date, you get a raise or whatever it is, then you can just increase the amount that is going into that portfolio. Very, very simple. If you guys have any questions, please let me know in the comments down below. I wanted to set this one for very new beginners that are out there who do not know any investing, who are maybe scared to get into the stock market because you're so overwhelmed and don't know. This is very basic. And again, any other questions you have, you can put them in the comments down below. And I'll be making other videos as well as far as what you can do with your budget, how you can get more money to put into the stock market, other strategies that you can do when it comes to investing, to other ETFs to kind of broaden your horizon, maybe get some better returns as well. And I'll kind of give you guys some other options out there for those. But that's all I've got for you guys today. Thank you so much for watching. I appreciate all of your support. Have a great one.